Good morning, everybody, or good afternoon, depending on where you are. We are just waiting a few minutes to get started, just to have give everybody a chance to get logged in. We look forward to the discussion. Good morning. For those of you who have joined, we're just waiting a minute or so for people to finalize and log in. We're looking forward to our discussion today with Paula. I'll wait another, let's say 30 seconds, and then I think we'll get started. Okay, good morning, everybody. This is Alex Jung. Welcome to the WBC's series that we're kicking off in 2022, Behind Closed Doors, Diversity and the Investment Committee. This is a series of discussions that we are launching with leading chief investment officers at some of the largest capital allocators in our country. Oh, pardon me. Technical. All right, not good to have a first time technical. A series of discussion with leading chief investment officers about the current dynamics in the investment committee. This is a topic that's near and dear to my heart, having been 25, 30 years as an investor in some of the largest private market firms. But this is a wider issue that we think covers a number of different segments across the economy. And this series is really about focusing on the CIO role and what happens at investment committee and how capital allocation decisions can really create a multiplier of impact. And we see the kind of impact that shareholder activism has with respect to climate today. We believe that that could even be stronger with respect to parity for power, position, and pay for women business leaders, which is what the WBC is all about. For those of you who are joining us for the first time, the Women's Business Collaborative came together. It currently has over 60 leading women in business organizations that work together with a shared goal of achieving parity of position, pay, and power for women in business. We focus on collaborating, sharing best practices, and trying to drive impact in an accelerated fashion. We organize along 9 action initiatives, and one of our action initiatives is this capital and finance area. And our belief is that by focusing on how capital is allocated across the economy, we can really drive change. And who makes those decisions? Well, it is in fact the chief investment officers at the leading institutions, endowments, and financial institutions that are the drivers of that. And so today I am thrilled to have Paula Volent here with us, who is a leading CIO across a number of organizations and endowments. She's currently the vice president and chief investment officer at the Rockefeller University. Prior to that, she was a chief investment officer at Bowdoin and worked in the investment office at Yale, Yale's endowment office. But what's fascinating about Paula, I think, just to start, is her incredibly unique background for someone who's sitting in that role today. And we all know that part of the heart of what we're talking about is diverse perspectives drive better returns. And so I would love to start by first thanking Paula for joining us today. And I would love for her to spend a little bit of time on how she got to the seat she is, running one of the leading endowments.
Well, thank you, Alex. And I am so pleased to do this. This is a cause and mission very dear to my heart. And so I think what you're doing is fantastic. I do have a unique background. I'm a first generation college student. I have an undergraduate degree in art history and chemistry. I have a master's degree in art history from the Institute of Fine Arts at NYU, as well as art conservation. And prior to making the switch to finance, I was an art conservator. So I worked for various museums. I worked for the LA County Museum, the New York Historical Society, the National Gallery in Washington. And I also ran my own business doing private conservation for collectors as well as small museums, and that was in Los Angeles. I always remember when I started my business, I had to get a loan, and getting a loan for a woman in business doing art conservation was very difficult at that time. So I had a great career in conservation. I focused on works of art on paper and contemporary works. And I don't know if many of you know that much about conservation, but what I did was I had to solve problems. Each one was unique because art works are unique. So say you spilled coffee on your Picasso drawing, you would bring it to me. I would do lots and lots of testing up front to make sure that I understood what was going to happen when I started treating it. And then I would probably put it in a bath of water or a bath of solvents or do various things. I worked on many priceless works of art at the National Gallery. I worked on Rothko's, Jackson Pollock's, all different things. In Los Angeles, I worked with a lot of contemporary artists on solving problems. I worked with Richard Serra on trying to figure out how not to have oil stains come in his oil stick things. So really interesting, and I loved what I was doing. But I realized that I had to go, first of all, I was running a business in private practice, so I had to figure out how to run a business. Also, I worked for a lot of museums, and a lot of times they couldn't pay me or they didn't understand, sort of the strategy. So I was sort of intrigued by business school, and in Los Angeles, I had a studio in Venice, California, and one day I had taken classes of business at night at UCLA because I was running a business and I needed to know more. And one day, the dean of admissions of Yale School of Management knocked on my studio door. I always remember because I had a paintbrush in my ear and this big work that I was working on, and I'm thinking, why are they coming here? And she talked about the program at Yale at that time, which was it was a master's in public and private administration. Now I have an MBA, they changed it, but there were a lot of people. Tom Krenz from the Guggenheim went there, and I realized that I wanted to do something a little bit more, and I wanted to make a difference in not-for-profit institutions. At the time, if you were in a museum, a Wall Street banker would come to you and you would sort of shake your head but not ask any questions because you didn't understand what they were saying, and you were afraid to say, I don't understand this. So I applied to Yale School of Management and I got in early admission. And then I got a fellowship at the National Gallery of Art. So I turned down Yale and they said, well, you can always come because you've been accepted. So I worked at the National Gallery for a while. I was working on starting a program, and the endowment wasn't doing very well, which was part of it was going to fund my new program. And I talked to Tom Krenz and he said, you got to come to Yale. This is going to change your life. So I went to Yale thinking that I was going to be a museum director. So of course, during that time, my husband and I were trying to get pregnant, but it wasn't working. So, okay, I'll go to Yale, an instant pregnancy. So my daughter was born after my first semester at Yale. And when she was about 2 months old, I realized that I wanted to do something while I was on my pregnancy leave from Yale School of Management. So I knocked on the door of David Swenson, because I knew that at a museum, you need to know about endowment. So I said, hi, I want to learn about endowment. He looked at my resume and he was like, you have no finance information on here. But then there was a woman there who I have to credit with giving me a chance, Ellen Schumann, who was she later went on to work at the Carnegie. And she said, oh, Paula worked at Bowdoin, because she was a Bowdoin alum. I had worked at the museum at Bowdoin as a curatorial assistant very early in my career. So David gave me a chance, and the thing that I started doing was filing. And those were the times when people had paper files, and I started that. And then little by little, he gave me projects. I remember the first project was doing something on mean reversion. I did another project on soft dollars. And also, I was a great writer because I had been an art historian, so I was a very good writer. So after I worked all the way through my MBA with David, except for a summer when I went to the Getty to work in their investments office. And then I took a job in investments at Disney. And then before I went to Disney, David Swenson had seen Seth Klarman's book, which was Margin of Safety. And he was like, hey, I want to write a book. You know, he was a little jealous that he wasn't there. So he asked me to stay on to write Pioneering Portfolio Management with him, which is this classic. And I ended up staying for 3.5 years before I moved to Bowdoin. But I have to say, people say, how could you make that shift? In my mind, it makes me a good investor, because like in conservation, when you do lots of testing and thinking about what could go wrong and what your strategy is going to be, I really feel that there's a complete connection to what I do as an investor. I do a lot of work. I think about what's going to go wrong. I think outside of the box, and then I make an investment and I make a commitment. So I think that there are parallels. I'm also a good writer, as I said, because I'm an art historian. I think writing and liberal arts is a really important characteristic for investors. And I also think differently, you know, because I have right brain, left brain. I worked with Stan Druckenmiller a lot, and he would always say, you know, you think so differently from, you know, investors. So I do think diversity and, you know, diversity of thought and bringing in different career. I also tell young women in their careers that a lot of it is about serendipity and raising your hand. You know, the serendipity was me walking into David Swenson's office and saying, hey, can I have a job? And then also I would raise my hand when he would say, I need someone to work on soft dollars. And I'm like, even though in my mind, I'm like, what's a soft dollar? I raised my hand. So I always encourage young women to, you know, take advantage of serendipity and also raise your hand.
Yeah, no, what a great path. I mean, that's one of the gifts of some of these roundtables we have is to hear the path. But I have to zero in on the point you made about you think differently. And this is something that's only really being thought of as a value add, right? In our investment world, in private equity firms, and you know, the firms that I come from, the largest investment banks, to say, actually, let's make sure the right people are in the room because they're going to think differently than us. And turning it from, oh, they're different to, oh, we really need that because we're going to make a better decision. And so this is a process I think a lot of investment committees and investment organizations are going through. But since you've seen, you know, 3 different investment processes and investment committee dynamics over decades, and when you look at the, you know, maybe not yours particularly, but you look at what is the dialogue at investment committee today, and you know, what do you think? Do you think it's evolving to that approach? Where do you think we are in our continuum of the investment committee dialogue and making sure the right perspectives are in the room?
Yeah, that's really important. And I just had my investment committee for Rockefeller last week. It's harder when it's remote, although you do get people from like the West Coast who can participate. When I got, first of all, at Yale, we had an amazing investment committee, but at the time I was there, it was all white men. And then I got to Bowdoin and there were 18 people on the investment committee. Wow. And I was like, this talk about groupthink. And again, all white men. And so David Swenson actually came to the Bowdoin committee and talked about groupthink, and we ended up cutting the investment committee down to 8 people. And all the people that we went to that we wanted to come off, they came off and they understood it. It was about sort of telling them why we wanted a smaller committee. And then at Bowdoin, I realized that the trustee at the time when I started was not very diverse. And so I decided that we needed to have more diverse voices around the table. So I convinced the president that the investment committee did not need to be alumni or trustees. and that we could go outside of the, the college community and pull in people. So for instance, we pulled in Zoe Cruz, who had, she was a friend, she knew a lot about fixed income, she was very experienced, she was female, and that was great. We pulled in, I pulled in different voices who didn't, and it's interesting because this is a funny story. When I got there, everyone was petrified of Stan Druckenmiller. Like if he said, let's put the whole portfolio in Japan, everyone would shake their heads. And I always remember the first time I raised my hand, I said, I don't agree with that. And everyone was like, and he was great. He I think he wanted someone to counter him. So I think it's really important in an investment committee and also in a corporate board. I do serve, for instance, on MSCI, the corporate board, and I think it's really important to have people from different backgrounds, gender diversity, racial diversity, economic background diversity, and I think that makes you a much better investor. And I try not to follow the herd in investing. I think a lot of people, I helped write Pioneering Portfolio Management. I think a lot of people thought that was a recipe book and a cookie cutter to how you would put together a portfolio. Every institution is different. And the first thing, I'm 6 months in at Rockefeller, and I'm spending a lot of time listening to the president, to the community. What is their risk profile? Because I'm not going to be like everybody else. I have to be with the institution.
Yeah. So this idea, so thinking about best practices, we know that fundamentally the population in the investment community just does not replicate our society, just period. But so you can't kind of come up with diverse people in your team overnight. Right. And so you talk about a really interesting idea of, part of the WBC is sharing best practices and helping organizations on their journey to be thinking about this. But this idea that if you don't have the voice in your team, you can't just create senior leadership overnight. But this idea is, how do you be, more creative and bring in outside people that can bring that perspective, consultants or advisors
I think that's really
partners.
important. I think that the field is not, many parts of the field are not doing a great job on diversity. I think there's counting of bodies, and that doesn't help. I think what we need, I'm with Seema Hingorani. I was one of the first people on the advisory board of Girls Who Invest for every single year since it's been. I've had a young woman work either at Bowdoin, and we're going to do one at Rockefeller. What I want to see, I don't want to see someone check the box because they hired Girls Who Invest and they were in a junior team and great, they had a great summer, but they checked the box and they put it in their statistics that they're, have gender diversity. I want to see a path up to the C-suite that person, that woman or person of diversity can get a small P&L to start learning how to manage money. So at Bowdoin, I had a very, very, long investment internship program. At first, when I started, it was hard to get women to apply. And also the same thing, Seema would tell you this, when we started Girls Who Invest, after the financial crisis, a lot of young women thought finance was a dirty industry, because of all the stuff. Yeah. And so we had to go out and say, you know what, in finance, you could work for an NGO. You could work for a museum. You need to know finance, right? You need to be financially literate. And also asset management is an incredible, field, and you can do really well in there. But again, you have to raise your hand and you can make a difference. So I think one of the things is we're not going to fix this overnight, and it would be terrible to hire people that are not, that are going to be like a token. They're going to represent females in the traders, and see, she didn't work out. But what we need to do is do the mentoring, have the opportunities for people to take risk and to fail and to let them do it again. I mean, I had incredible opportunities. When I came to Bowdoin, I was associate treasurer. And then my president, Barry Mills, who was amazing and a great advocate for women, he recognized that, that I was doing a good job. So he brought me up. And the same with Stan Druckenmiller. Little by little, I got more opportunity and more freedom to make decisions and to propose just to propose new investments that weren't really in their, their typical venue, investment type. But I do think we all have to support women. The other thing is, I think women in venture capital are having really hard times raising capital, even if they raise a first fund and it's really successful. And so we have to figure out how to change, how cap intro and things like that are done.
Yeah.
Yeah.
Yeah, I mean, I think that's a great segue. The one side is, okay, let's make sure that we have diversity of thought at the investment committee, because there's a lot of great data that shows if you have diverse people allocating capital, they tend to pay attention to diversity and they tend to have more diverse portfolios. So we know, that piece. And then the question is, going to your point, is we know the data is that the women fund managers, whether it's venture or certainly as you go into, my world of private equity and private credit, that it is more challenging. So there are structural biases, whatever, like, let's not talk about the problems, but so what is happening when you're making that decision or evaluating that fund manager to try to alleviate, or I say address, some structural biases that just happen to exist? Like, what are you guys doing, or what have you seen from a best practice perspective that's trying to address that?
Yeah, every single meeting we have with the manager looks at the org chart and wants to see where the women are. We were long-term, there's an interesting book out now. Sebastian Mallaby wrote this book. It's called The Power Law. It's about the history of venture capital. And there's a really interesting chapter about what happened at Kleiner Perkins when they tried to add women and it didn't work out. As you know, there were a lot of legal things, and it's sort of about getting the culture so that, and there's these, things that people don't even realize they're doing on how they ask a question or something like that. So you have to get the culture right to support them. The other thing is, at Rockefeller, for instance, we do a review of our managers and their org charts. It's hard. It's, there's more information out there lately, but it's hard also to do racial, because usually with women, you can look at their names and figure it out. But I think more and more we're asking our managers to provide us with the data on what their teams look like. And I think that's really important. I also know in Rockefeller, we're backing women-led firms. And so that's a priority for us. And so every investment committee, we have Lulu Wang on the committee. We have, incredible women on the committee. And so they're pushing us to say, I was an art historian. So if you remember, Linda Nochlin wrote this great book, Why Are There No Great Women Artists? And it was because they're ironing the pants of Picasso or whatever. And so why are there no great women investors? I don't think that's a question. I think there are great women investors, but where are they in your portfolio? And I also think that women think differently, and you can bring in some really interesting managers. There are boys clubs for sure, like Global Macro can be a boys club. There's certain hedge fund strategies that can be boys club, but I think women should aspire to do that. Also, in a lot of times in graduate school, women tend to go for the cap intro and the IR person, which is fine. But you could be a portfolio manager too, and you shouldn't be, pushed into the IR function unless you want to go there. And so that's something that's frustrating, I think, a lot of times in recruiting.
Yeah. No, I mean, I think you sit with a very interesting perspective, not only the background we talked about, but you are in fact a woman. And so, and a CIO, the boss, in terms of being intentional, making decisions on a process and how to amend your process to try to address some of these things. But, I could not find data on the percentage of women sitting as CIOs at endowments or across institutions. I don't know if you know that number. Do you know? I didn't see the data.
It's getting better. One time I talked to Jane Mandillo, who was at Harvard at the time as the CIO, and we were talking about it's like running a small business, because as a CIO, you have to report to your investment committee, you have your president, you're doing manager of managers. Most of us, are not running stocks and bonds, but we're meeting managers and we're trying to get access, and we're trying to, tell people about our mission so that they will let us into the really things. But I think, being a CIO is a really good job for a woman. I think you're judged on your numbers, which is good, your performance. I also, in the beginning, I think this is getting better, but in the beginning during manager meetings, I think the male managers would open up more to me. I would learn more because I would then share notes with a male colleague and they're like, how did you find that out? And I'm like, I don't know, they just told me, But I do think, I think it's a great career. There are many great women and more, like there's Colette Chilton at Williams. There's Ann Martin at Wesleyan. There's a group of women that are really strong, and we need to support each other, and we need to make sure that we're mentoring the next generation to come up. But endowment management is, really interesting. Every day it's different, but you also do have to deal with your committee, which is sort of being like part psychiatrist, part, getting people to be on the same page. You have to bring consensus and decisions and all of that. And also you are working for a mission-driven organization. And so I think that's really amazing.
Yeah, no, you definitely are wearing a lot of different hats. I just, until we, have more representation as CIOs, I think, organizations are going to have to be a little bit more creative about looking at their investment process. And I just don't know if that's actually happening from, so in organizations that aren't led or more diverse in terms of the investment committee, are they changing their investment process yet? Or are they counting bodies? I mean, so we're in a behind closed doors, even though this is a public forum, but, where do you think we are really on the continuum, and where, how do we kind of move from where we are today? And I mean that really with respect to looking at investment processes, not counting bodies.
Yeah, I think it's disappointing. I think we have a long way to go, but we have to keep front and center with our committees and also with our investment managers that we want to see the diversity. For Sequoia, which used to be very male oriented, they have added some women PMs, and that was because of a lot of push from their investors. And there are brilliant women out there, like in Silicon Valley, you have some really interesting women. I personally have been investing in small women-led funds, and like they're $39 million is what they're raising. That's all they could raise. Right. And so then you're like, then you get the big raise. Also, for instance, Zoe Cruz, who I still, she is running a crypto fund, a woman-led fund, which is really interesting. It's hard, then you have all these sort of young males that are supercharged, that are raising millions of dollars just like that from all their network. And it's just hard for a woman to get into that network. But as endowment, a CIO, we are definitely trying to make it better. We're trying to make sure that we're meeting the women managers that, and there's a couple of CIO or endowment forums where we do group meetings with diverse managers that are trying to gain traction. And I think that's helping a little bit.
One of the things you and I talked about just before this was this idea of collaborating, because you guys can each control each other's, but how almost as an industry and as a subgroup, are you finding ways to collaborate in that way? Like, I just met this great woman manager. I know you guys have diversity goals. I'd love you to meet. Like, is it more informal, or is there a formal, do you think there's more structure that can be put around that collaboration? Maybe you can talk a little bit about that organization that you and I were talking about.
Yeah, so I'm on a number of organizations. And one thing before we start going into the organization is I think that we do need to, a while ago at Morgan Stanley, they do the Breakers Conference and all that. They do these big things. And I would always raise my hand and go, how come you can't even find a woman to introduce some of these people? So of course I got roped in to do it. But, but anyways, so now, I mean, you have to be the squeaky wheel. You're like, hello, you don't have any women on your team, or where are the women? And so one of the things in the cap intro thing for hedge funds, it was very male oriented. And I complained to Morgan Stanley among a group of us, and they set up, and now it's a regular thing, a woman only cap intro for women hedge fund managers that would present. And, you know, one of the things we realize is we also have to teach women how to, you know, present, like not apologize, you know, like, and this is a closed door thing, but you'll have one manager who will be male and who will totally skim over the fact that he crashed and burned, you know, 2 years ago and had this big drawdown. Then you have the same type of thing with a woman who the first thing she talks about is the drawdown that she has and apologizes for it. So we have to sort of, you know, work on how we present. Again, it's sort of like raising your hand. It's learning how to be confident and to be proud, and everybody has drawdowns and you don't need to apologize. So I think working on that Morgan Stanley cap intro, we're trying to work on how women present themselves, you know, to other investors. And we need to be proud. We're really good investors and we can't make excuses.
So I am going to do a little plug for two of our partner organizations and programs that we support. And I know you know it, but one is the 100 Women in Finance Cap Intro Conference. I mean, for that exact, they recognize the challenge was the network, and how do you change that? Now that's been something that's become, you know, quite a large conference. And the second is going back to your, okay, now you've got the introduction. What are you going to do with the introduction? You know, a lot of these women haven't been mentored the way they should have been because there haven't been senior women at the top to mentor them, to teach them how to present and all of that. And so PE Win with their project Pinklight, which is really helping those women launch their firms and get their materials together. So, you know, it's great. And we love to highlight those are, you know, two programs today that are addressing some of the things that you and I are talking about, but getting the big banks engaged in this in a bigger, you know, in a bigger way, like your Morgan Stanley is obviously something that could be even more.
And I also think, I know the Me Too thing, you know, I was worried about it because, you know, for young women and, for instance, Girls Who Invest, we heard from some women that, you know, that after work, sit and have a beer and talk about the deals, they weren't getting invited into them anymore. And so I think you have to think about, where does business happen? You know, it used to be when I went to business school, everyone said you need to learn how to golf because all the business happens on the golf course. I don't know how to golf, but I should have learned. But anyways, you have to sort of be in there. And so I think people are starting to realize it, but you know, some of these organizations, like you say, are helping us create networks where we can hear about the deal. You know, one of the things that's really important in my job is to have my ear to the ground and hear about, like, maybe someone who's launching. Right now we're working on Bitcoin, or we're working on crypto and gaming, right? I don't know anything about gaming. I did not play a Nintendo when I was little, you know, but anyways, we're doing that. But I'm trying to, you know, we all work in a network and we collaborate. And so I might see an interesting woman that's starting something and I will introduce her. It's sort of like the Kevin Bacon thing. How many things are you connected to? And we need to make sure that we do that and that we're supporting some of the women who are raising money.
Yeah, I think that's one of the, you know, kind of key, I'd say, focuses is engagement for the initiative that we focus on at the WBC, which is increasing that engagement. And engagement is networking and creating, you know, those connected points across a lot of different women in financial services, whether it's the investing world or the Morgan Stanleys of the world. And, you know, again, broadening, you know, the exponential nature of networking. So
and I think that's really important. And I think I told you that I'm on the board of SBAI, which is the standard boards of alternative investments. It's UK based, a lot of pensions, a lot of white papers, a lot of investment managers. I'm on the diversity committee and they are doing some really interesting things. One of the things, again, they're very against counting bodies. One of the things they're saying is give women a chance, you know, create an internship and let, you know, and I think women internships to show young women what it's like. It's funny, I had an internship program when I was art conservator, and I always remember I had a Harvard student who came and spent a summer with me, and they would never want to be an art conservator. They didn't realize that you spent hours looking through the microscope and doing this really detailed work. They thought it was going to be much more exciting. But I do think that internships for women, you know, like roundtables talking about what we do. Also, you know, I had, my daughter was born, and then I went through business school with an infant. I think it's important for women to realize some flexibility. And I think endowment is, you know, you can be pretty flexible. And I think that we need, you know, now that we're doing remote, I think there might be a hybrid method, which makes it more attractive. I think, you know, no longer is the only way to be a CIO to, you know, work the long hours at the investment bank during your youth and give up your life. But, you know, I think there are many ways that we can open the door to more women, but again, it can't be body counting.
Yeah. Yeah. I mean, pipeline is a, you know, an ongoing focus, and it really has to feed through from girls who invest, you know, all the way up to, you know, the highest executive level. When you talk about, you know, the standard board for alternative investments, which, you know, which represents, I don't know how many trillions of dollars of allocating capital there. Do you think that, you know, that kind of an organization is what can push change, and people will kind of stand by that? Or do you think this really is hand-to-hand combat with each of your portfolio, you know,
No,
managers
I think
you
people,
allocate capital to? And
yeah, I think people are seeing the writing on the wall. We have KPMG for our auditors. And so every year you ask, okay, what's on the, like, what are you worried about, or what should we pay attention to? This year, DEI was on there. Also on corporate boards, you know, NASDAQ is asking more on DEI. What does your board look like? I think more and more that's going to trickle down to the investment managers. What does your investment team look like? You know, I one time had an argument with someone. I said, you have no woman in your organization. I'm looking at your pitch book and it's all these men. And he said, well, we have 4 administrative assistants that are women. And I'm like, you don't get it. That is not diversity, right? You need to give them the chance. And so I think SBAI is going to do a really good job because it's connected with all these institutions. We're doing great white papers. I'll actually connect you to some of the white papers on diversity. And we're trying to create, which I think is what you're doing, a toolbox on how can we make this something that is like in your back pocket when you do a conversation with a manager, or you do a conversation about hiring. You know, how do you look at that? So I think SBAI is going to be very collaborative, and I'd love to make that introduction.
yeah, no, absolutely. I mean, I you know, we want to support the collaboration of, you know, the best minds around these things. It is a journey, and you can't, you know, turn the light on and light off.
Yeah.
But one of the biggest determiners of the light going on for those that are less evolved, let's say, is data, and is performance data. And one of the things that I found just spending a lot of time on this topic the last several years is the lack of definitive data sets that we have, so that we can kind of get the non-believers or the people who aren't, you know, changing their investment process and paying attention to the, you know, this concept. We have data, we have diverse teams outperform. Okay. So we have that data, you know, it's well published. And then you go in and you say, okay, we know 96% of institutional assets under management are men. So, you know, we know that doesn't represent it, but getting into performance data and things that can really drive change and convince people, you know, are you guys doing work around that? It feels like a bit of a hole of analysis.
Well, one thing I'll tell you, in due diligence, for instance, in venture capital or private equity, which you're in, one of the things that I want to do before I re-up or hire a new manager is to see who led the deals. like go under the cover and see, okay, like a lot of times you'll have a brand name firm and all the people that that are responsible for the track record went off. And a lot of times lately, when you go under the tent, you're seeing that women were really instrumental in some of the deals that happened, and they were the leaders of them. And so that's really important to bring them up and to give them credit. A lot of times men take, close out the deal, but then we need to see where the women are adding value in the firms. And we do want to talk to the woman at the team. A lot of times also in due diligence, we've been in remote, but I usually like to meet a team in person. And then I like the head of the team or the head to leave and then to meet with the team alone. And a lot of times you can tell a lot about the culture there. And I think that's important, and that has to be part of our due diligence. But I think more and more we're going to have to ask for transparency. We're also going to have to track the success of these small firms that women run and put it front and center. I don't know if you know Joelle Caden. She runs Accolade. She's running a fund of funds that's going to focus. It's called the Impact Fund, but it's mostly going to be on small women funds. And she's going to put those out and front and center when they're successful, and I think people, people will follow that.
Yeah. And those are the kind of data sets that I think are required. We didn't have big data sets before to look at them. And as you said, women were integrated into the team. So it was hard to define. So, it would be great to have a project that, work with people that are getting the access to that live data and have it something that,
and another thing is one of the things that I did at Bowdoin, and one of the things that I've been given, I asked for at Rockefeller was a farm team. And a farm team, it's not like a kids table. It's just, backing with a small amount, a new fund, whether it spins out of an established thing. But I've been doing more and more backing women who are spinning out of organizations. So there's a woman, Cyan, who was at Founders Fund. She's spinning out. She's raising a very small fund. We're going to invest with her. I think she's fantastic. We're going to do that. And I can tell you, people are going to be jealous that we got in first, because they're not going to be able to get capacity in the future. So that's what I'm doing in several things. I did a small investment with Serena Williams Fund. She's running, and she's focused on diversity. And, she's playing tennis and all that. It's just her connection that connects the companies with great connections. I think she's going to do really well. She has a really strong woman underneath her that's really strong. Again,
she's great.
They're going to do things. So things like that, even if it's a little bit to seed someone, and then they're creative and they could say, Rockefeller invested with us. I am all in. You know what? Tell the world that a big institution is investing in you, because we want to get you on the map. There's also a lot of copycats that try to see what the smart investors are doing. And so hopefully we can start bringing more people into women-led funds.
Yeah, I think you just raised some such great examples of how you can be more impactful outside. Obviously, the standards board is one way because it's industry wide, but just thinking about the ability to have a reference of an established endowment as one of your investors and being able to say that out loud. We know it's a club,
Yes.
So you use it as a club. So that's like another great best practice. I think you highlighted so many that, I'd love to, summarize and have available to people, because I think it's a concept of having an industry-led collaboration. But at the end of the day, as we all know, change is just hand-to-hand combat.
Yeah.
Sometimes, and some of the voices in you and your colleagues are leading it. And as you think about some of the things that you talked about, is there any organization that you see that has figured it out, or like, I think we should do things more like them, or are trying new innovative? You highlighted things I do not hear many of our institutional investors, doing. But so it sounds like you're kind of leading some innovative ways to think about it. Do you see other best practices that you're trying to evolve to, or organizations that are trying new things to address these things?
Yeah, I am a member of 100 Women in Finance. I'm emeritus. I was on the board for a while. I think they're doing a good job. I think there's a lot of organizations, but we need to get together, which is what you're doing. We need, all these disparate parts and all that. We need to have power, and I think we need to get together. I am very much always thinking about what other tools can we put in? How can we make this better? What can I do as an investor on bringing women, as I said, up into the C-suite? I think there's like still this glass barrier there where you get so far and then you don't get the promotion. And so I think that needs, and I'm working, we're doing a search right now on our team, and I hired a female-led search firm, because I decided, what, I'm going to put my money where I'm going to do it. I'm going to back a woman, use that. So I think there's just little things that we need. We also need to include men. A lot of the people that I know have daughters. I have a beautiful daughter. And I talk to a lot of men, like, what's your daughter going to do? Why don't you have her stop by and hear about investments or something like that? But we need to include men in the discussion and helping us with the toolbox and making them realize that they're going to make better investments if they have a diverse group around the table. That's not going to be just groupthink and shake your head and follow the path. Also, as you know from watching the market, and you have everything from Ukraine to interest rate rising to the punch bowl going away, it's going to be we've all been through a long bull market. So many people have not ever seen a bear market or a downturn. So this is going to be a trial. And I think a lot of women are creative and will be able to step up and think differently. And I that's what I'm looking for.
Yeah. No, there were a couple of great points I just want to highlight. We have to have a partnership approach. This is not about, women fighting for women. It's about, creating, a more productive economy fundamentally. And having that partnership that we can all be better and make better returns, better companies, help companies become better, grow faster, become more productive.
And also we need to be visible. I hate talking to the press. I try not to talk to the press because they always get it wrong, but I am trying to be visible because I have a great track record. I do think differently. They wrote a Harvard business case about me recently, and I want to say, see, a woman, sorry, I'm in New York and there's sirens, but I want them we need to be, if we're successful, we need to get out there and show other women that we can do it. That this is a job. It's hard. When I went to business school, there weren't a lot of women in my class, and probably, it's different now, but I do think we need to be visible with our successes.
I think that is just such a great point, and I'm so happy that you chose one of your visibilities as becoming our lead to this series, because you are deep in it. This has been an initiative that you have put your money where your mouth is and your own time and mentoring. And so I just think it's been a great discussion about the industry today. And the most important thing is, how can we all share best practices so that we can bring it back to our own organizations and think about how we can be deliberate in the way that we're doing things, because we're not perfect, we're on a journey. But this is a big part of capital allocation to women-owned businesses, women-owned funds, and capital allocation in our economy. I would encourage, I thank you for everybody who's been putting lovely messages in the chat. We are really excited at WBC about the collaboration happening in this area. And I would encourage everybody to go to our website, wbcollaborative.org. You'll see our latest white papers. You'll see programming across the initiatives we talked about this, women in C-suite, women on boards, and across, women in capital, entrepreneurship, technology. We really have some great thought leaders putting programming there, and really try to be a repository for a lot of the good work that organizations are doing. And we're thrilled to continue this discussion with you and your colleagues on how we can help amplify the work that you guys are doing. And just really enjoyed having an open dialogue about about the realities of today. And we're making exciting progress. I mean, I think you always have to say, we're making progress every day. And there's a lot of great talent in the women talent that I've seen in the investment industry that I'm excited about. So I'm hoping we continue that trend. So Paula, can't thank you enough for being part of our discussion on this and your time, and look forward to.
I'm very honored, and this is so close to my heart. I want us all to be, women to be great. I want that number, the 96% or whatever you said was the, I know for Girls Who Invest, it's 30 by 2030, or I forget what the number is, but we got to get that number up. And, there's women think differently. And I think performance for institutions like Rockefeller will improve if we have more women around the table. So thank you.
Yeah, well, great. And so we'll sign off now. Thank everybody and look forward to seeing you at our next roundtable.
Okay.
Well, Alex, we too want to thank you and Paula, because this is so important that all the WBC community understands chief investment officers and best practices, and absolutely advocates what you're teaching us. And we shine a light on all those making investments behind women. So Paula, congratulations on the Harvard Business School. Thank you, Alex Jung, for really bringing this out to WBC. We are really thrilled that we will be celebrating Women's History Month at the New York Stock Exchange on March 4th. Alex, maybe we can get a shout out for chief investment officers. We are so grateful.
Yeah, absolutely. Okay, everybody have a great afternoon. Look forward to continuing the dialogue.
Thank you. Bye-bye.
Bye.